Well, here we are, October the 4th. It's Monday, and it's another crazy weekend, uh, just all over the country. Today, there's a special meeting by the feds that
An emergency meeting.
yeah, an emergency meeting that's about to start in about 20 minutes, 8:30, 11:30 Eastern Standard Time. And it has to do with something that we're going to talk about today. It has to do with liquidity in the banks. I guess if you didn't know, Credit Suisse has a serious problem right now. It was talked about, huge problem. And by the way, I got Robert here with me today. Robert, you say hi there. Andy is not here today, but he'll be back. But anyway, yeah, there's a huge problem with Credit Suisse and this liquidity. So, one thing I want to talk about, there was a mention of, and it came out this weekend from Nomi Prins. And those of you who don't know who Nomi Prins is, Prins, Nomi is a professional, world-known geopolitical analyst, and she's got many books out there. She's a best-selling author, and she says that the reason there is so much uncertainty and chaos in the global economy comes down to one simple theme. And that theme is that a couple of decades ago, central bank money printing has now created the biggest Ponzi scheme in the world that the world has ever seen. And here's what she explained. She says that the Fed and other central banks have created basically the idea and put it into practice where whenever there is a real crisis, however they deem it, and they're going to print money, and a lot of money, she says. And she is pushing this envelope forward on the back of a very artificial fabrication of money. And that is the Ponzi scheme here, she says. And she says that the Ponzi scheme is actually the money that is sloshing around and is somehow owed more to reality. And that is owed to actual profits and actual production and actual growth in the economy, which it isn't. You understand what she's saying, Robert?
So try to explain what she's saying.
So basically what she's saying is that there's just money that's just being printed and printed and printed, and it's really not going anywhere. It's just a big old Ponzi scheme. Pay Peter to pay Paul. Back and forth, back and forth. Here's what she says. She says, look at the way the money gets printed. And she says, as we saw and everybody woke up from the pandemic, look at all the closures in the economy, and the economy still has not gotten back to where it actually was. Well, that's obvious. I mean, closures, you got employees laying people off. Office buildings are not fully occupied. You've got inflation going through the roof. In fact, I was listening to some people talk this weekend, and they were saying that, inflation is doing great. The numbers are going down. Gasoline prices are going down. And I'm thinking, are you out of your minds? And they're talking about how they were talking about on, I can't remember, it was one of them stupid Sunday shows. And it was talking about how the only thing that's up is food prices. Everything else is down. And I'm thinking, no, you're not in real reality. But anyway, listen to what she says. She says, look at the closures in the economy, and the economy still hasn't gotten back to where it was. And it's still not stable. And people are still facing economic angst. But the Fed created $4.5 trillion of money basically overnight. $4.5 trillion basically overnight. And she said, that's a Ponzi scheme. That is something that's going to keep going whenever there is a crisis. And that is going to paper over the fact that we are not actually healthy. And that's the definition of a Ponzi scheme, when you always have new money coming in. And in this case, it's new money being created by the central banks. It will replace any cracks, any faults, any problems that are emerging along their way. And the Fed doubled its balance sheet and did not double the economy.
Wow.
And that's a Ponzi. What are your thoughts on that?
It's alarming. Just think about that. $4 trillion was printed. She's referring to after COVID hit.
That's right.
After everything had happened. So they printed money with no value. They printed money that had no assistance to actually helping us out. It was just the creation of a debt-based monetary system. It's what we're in, you know?
Right. Listen, Prince goes on to say that we're not retiring 30 trillion in U.S. debt. In other words, we're just not putting it away. We are not retiring 267 trillion in debt around the world. Again, not just putting it away. That's not happening. She said there are indications that we could have a massive crash. She says, but to me, I think there is a treadmill that is spinning here that is going to just keep spinning. In other words, pay Paul to pay Peter. Just keep spinning and spinning and spinning. Print, 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 print. And instead of completely crashing, that's why I think there is going to be a lot of mini crashes, followed by many rallies along the way. And I don't think we're in a period which is what I would call a permanent distortion. She says where there is going to be a backing off of all the money that is being created. And I don't see one massive crash. I see massive turbulence, which is the permanent distortion. She says, I don't see an endpoint unless there's an extreme factor. And there are things that are coupled with the instability that we have in the markets relative to this money being printed. And if they come in at the same time, yes, we could have a massive crash, and we absolutely could. She says, meanwhile, in the real economy, the struggle for common people like you and me, common people, will continue to get worse. And she says right now, about 20 million families in the United States are behind by one or more payments on their electric bill. I have kept up with my electric bill, but I notice it keeps getting higher and higher.
Right.
It was like $600 last month. It's crazy. Wow. Yeah, electric bill is getting higher and higher. She says on their electric bill, because they cannot afford them at these levels relative to rent and food and all these other things that are going up. 20% of Americans are using their credit cards now to pay their utility bills. And they are starting to get behind on those credit cards for which rates have gone up. Because remember, as the interest rates go up by the Fed, so does your credit cards.
You talked about this last week.
Exactly.
Yeah.
So she says, so we are in this situation where all these problems are happening at the same time for most real people in the real economy. And raising interest rates so quickly is hurting people way more than people leveraged in the markets. And her advice for common people is to stay away from debt, buy gold and silver and other type of metals, and hold on to some cash. And she says, I do think that the dollar will weaken from its highest levels. And I've always said that. The dollar is just rallying so high. And she says, I think it's going to strengthen first. And when we get to the Fed three-part pivot, which is similar rate increases, followed by neutral policy, and then more money printing, we're going to start seeing a weakening dollar. And that's what we were talking about last week. Robert, you even mentioned it when the Fed pivots, right?
Right.
That's when the bottom of the dollar is going to drop out. You want to talk a little bit about that?
Yeah, I mean, you just gotta look at what they're doing right now. I mean, it's like I said last time. If they were gonna fix the issue that we have at hand, they would have already done it. You know, it just seems like they're just digging a deeper grave, you know, for Americans. And it's like you spoke about last week. You know, you have families dealing with, you know, not being able to pay their electrical bill. You're dealing with families who are unable to put food on the table. You've seen this coming from a mile away, Alan.
Oh yeah, and listen, let me tell you, it finally happened, and what we've been warning about, in the past year is namely that the Fed's aggressive rates is actually going to break something, and did in fact break something. And in fact, we talked about this last week about how the dollar rallying so high is going to hurt other baskets of currency. In other words, other countries' currency. And in fact, it did break something, actually, in quite a few something. It first did it in the Bank of Japan, and then it did the Bank of England, and then now Credit Suisse. And as Bloomberg just reported, that the Treasury 10-year yields now are surging relentlessly higher in a way we've rarely ever seen, as they finally realize the Fed's resolve to try to tame inflation. And that's why, they just climbed on this ninth straight week, and the longest such streak since early of 1994, jumping 1.18 percentage points in that time. And the bond sell-off is the most savage move since the April-May rout that sent yields up 1.4%. So what we're seeing here is the Feds are just rallying the dollar really high, and inflation is going up. And like I said, it's hurting these other countries really, really bad right now, Robert, because they literally cannot keep going. So they're going to have to do something themselves. So they're going to have to raise their interest rates, right? And when you look at it, there was a story that came out this weekend, and it was talking about how inflation keeps the U.S. from stepping in to slow the dollar's rapid rise, right? So as inflation just keeps going up, the dollar will continue to keep rallying as well. And once the dollar breaks down, once that dollar breaks, then guys like me and Robert and other clients of ours out there that have gold and silver, they're going to find that gold prices accelerate, and they're going to really accelerate fast and high. Already today, I was looking at silver today. Silver's almost at $21 an ounce right now. I remember when it was 16 just a little bit ago. So, look, silver, we've said, is going to go 4-to-1. So it's really smart that you actually get on the bandwagon and start purchasing gold and silver. If you've got a retirement account, start getting your retirement account in order, because when this nasty fall happens, like it's already happened all through the month, and I keep watching how the Feds keep using the repo and reverse repo operation to run their manipulation. Because look, I saw $2.4 trillion was put into the markets over the weekend, and all you have to do is watch what the stock index futures are doing, and they're up, and then they try to sustain them throughout the day without any bad news coming in. Well, we got a lot of things that are coming in this week that we'll be able to determine, but I don't think that the market's going to stay below 30,000. Well, it's at 29 right now, and I believe it'll stay at 29. I don't believe it's going to go over 30, but hey, they may surprise us all. The thing is that you can actually protect yourself with a self-direct IRA. And what that self-direct IRA does, like we've said before, is it gives you the advantage to be able to break free. In other words, it's like having chains on your legs and your arms. And these guys like Edward Jones and Fidelity and all these other different custodians out there, including these annuities, they only allow you to buy what they sell. So in other words, if they're selling stocks, bonds, mutual funds, these sort of type of assets, then that's all you can buy from them. So a lot of them will tell you, oh yeah, we can sell you gold. Well, yeah, they sure can. They can sell you gold paper, and you don't actually physically own the actual physical gold and silver. So don't get caught up in that mind trap, because they will try to convince you that you can have gold, but it's gold paper. Because remember, that's all they sell. They only sell paper debt instruments, right? Where in our case, we actually get you the actual physical gold and silver. And once you have that physical gold and silver, you can always exchange it for more value later on, right? Because let's look at it. If you look back, Robert, you want to go back in time and talk about like the percentages of gold and silver?
Yeah, well, if you look at a 20-year chart of physical gold and physical silver, you'll come to the realization that had you invested, let's use silver for example, 20 years ago, your account would be up 4 times the value than it was 20 years ago. So for every $1,000 you had invested, you would have $4,000. Gold, on the other hand, on a 20-year chart, it's about 5 times more the value of what you initially invested in 20 years ago. As an investment asset, you're probably looking at anywhere between 10 to 12% on physical gold. Physical silver, from an investment standpoint, you're looking at anywhere between 11 to 12%. As an investment, not very bad. But this is all about defense, right? It's all about putting yourself in a position to where you have solvency, you have liquidity. Because it seems like from what's happening with Credit Suisse, from going from a $29 billion market cap to a $10.4 billion market cap.
Huge numbers.
Credit defaults, defaulting left and right. It looks like right now is the time to be focused on playing defense, getting your house in order, right?
It's like I've always said, Robert, you either want control or you don't want control. And, if you don't want control, then you're going to lose control because you don't want control, right?
You're giving it up.
Right. Doesn't take a rocket scientist to figure that one out. So having control, and that's what's nice about the self-directed IRA, is it gives you back that control so that you decide on what you want to invest your retirement funds in rather than having someone else tell you that you can invest it in this, this, which is all just paper debt instruments. Remember this, the minute that you give your money to a banker, a custodian, whoever they are, and realize these are all good people. They're good people. The problem is that it's not them who affects you or that affects you. It's actually Wall Street that ends up affecting you. But to get back to talking about once you give your money to these people, well, legally speaking, these are all private corporations. So you're basically lending your money to them is what you're doing because there's no guarantee. And let me tell you, people say, well, you don't have guarantee. Listen, you do have a guarantee on gold and silver because it's physical. So I know that if I lose 40 or 50% of stocks in the market, I know one thing, I got to have 40 or 50% just to get back even again. And who knows if I ever will get back even, right? But as far as having it in actual physical gold and silver, I know that it's real, it's tangible, I still have it. And all I have to do is trace back in time and look at what gold and silver did way back in times and what it's still doing to this day. It doesn't take a rocket scientist to know that it's there and I can always exchange it for more value later on. Think about it. Why would all these other countries have reserves of gold and silver if they weren't using them? There's a reason that they're holding all these reserves. This is why Putin, for instance, upped his reserves way back when he took over Crimea back in the days when he annexed it back then. China ups their reserves. Poland ups their reserves. The United States ups their reserves because it's the only thing that's considered real money when you really want to come down to it and look at it. Robert, you got something to say?
Yeah, well, look at it from this aspect, right? You have currencies collapsing. You have some of the second largest bank in the entire world, Credit Suisse, crumbling, capitulating, being demolished, right? You have the Federal Reserve manipulating the system, right? It just comes down to look at everything that's happening around you. You're next, right? You got to think about it. What are you going to invest in bonds right now? We're headed towards a sovereign debt crisis, right? What are you going to invest in stocks? Well, number one, your stocks are not keeping up with the pace of inflation.
That's for sure.
Right? You're looking at heavy manipulation coming from Wall Street banks each and every day, right? And look at it from this aspect. If you don't want to take a gamble with your money, if you don't want to play risk, and you're risk adverse, well, mitigate a portion into physical gold.
Yeah, diversify.
Yeah.
I've always said diversify, diversify, diversify. Don't put all your eggs in one basket. I've always been one of these that I like to have a backup,
Right.
right?
An insurance policy, right?
Basically, yeah. Look, we get insurance because we want to protect ourselves, like in our homes or in our cars, right? So why not have insurance financially? So diversify, buy some gold and silver. If you don't have an IRA, just purchase it outright. Just purchase the silver or gold, platinum, palladium outright. Store it either in your lockbox, whatever, wherever you feel like it's comfortable to be stored, and then just hold on to it. The recommended times are 3 to 10 years. However, if things are better, then you might want to cash it out sooner. It's all up to you and what you need. Just remember, it's not a get rich quick scheme. This is a way to protect yourself, when things like what's happening right now are going sideways. You have something you want to put on that?
Just ask yourself, why does J.P. Morgan have 200 million ounces of physical silver? Why does...
Let me ask you, what is your opinion? Why do you think silver is rising right now?
Pragmatically, industrially, you have to look at what took place a couple weeks ago, even a month ago. The price of silver was trading at the same cost that it mines for.
That's exactly right.
Right.
Yeah.
So I'm seeing.
That's when you really wanted to start buying. And I had people coming. In fact, myself, kilo bars. I kept saying buy kilo bars. That's what I'm buying.
Well, I just
kilo.
I've been buying a bunch of rounds. I've been buying a bunch of silver rounds. I keep buying silver. I mean, the best time.
So those of the ones out there that can't afford gold, then definitely go silver.
Buy silver, but I mean, the reason why silver's going up is because it's coming out of a consolidation. I mean, you'll find yourself in a position where the price of spot silver is at 25, 30, 40, and now you're FOMOing in, right?
Yeah.
The fear of missing out. You're FOMOing in and catching the top of a market. And I think a lot of people, that's what they do, whether it's in the stock market, whether it's in the commodities market, whether it's in the crypto market, right? When things it's kind of like what Andy said, when things seem kind of dull, kind of boring, that's your time to buy. Right.
Robert, I've always said, if digital air can become worth thousands of dollars, whatever the dollar amounts are, if digital air can become worth X amount of dollars, then what can something real become worth? And that's why, look at that silver coin. And I don't mean like a nickel or a dime. I don't even think people use those anymore. I don't know. I haven't used change in so long. I remember how when I was a kid, I'd have these big old water buckets or milk buckets, and I would throw my coins in there.
Right.
And but now I don't even keep a coin. I haven't had a penny in my hand in so long. Oh well, I take that back. I saw one on the street. And I picked it up. I picked up a penny.
Heads up?
I think it was heads up.
Yep.
I think it was heads up. Yeah. But a silver, anyone can afford silver. And what Robert was just telling you, the numbers and the predictions that we're seeing is that silver is supposed to go up to 4-to-1. So, think about it. A silver coin like a silver eagle or a silver round or these exclusive coins that they have out there, any coin. Think about it. If you have a Mickey Mouse coin, right? Let's just talk about Mickey Mouse for a minute.
Okay.
Well, no, that's Disney. Let's say you have a Trump coin. Let's say you got a Trump coin. And that Trump coin is pure silver, 0.999. That's investment grade silver right there.
Absolutely.
Anybody will exchange that
the highest content
for value.
Yeah.
For value, believe me. And also Mickey Mouse. But
you got to look at this though, Alan. A couple months ago, 6 months ago, we were talking about silver premiums increasing. Let's use the American Silver Eagle. At that time, 6 months ago, there was about 20 to 30% premium on a 1 ounce American Silver Eagle coin. As it stands today, fast forward 6 months, we're looking at about 115% premium on the Eagles alone. What does that tell you? Supply and demand.
Oh, big time. And in fact, for a while there, we couldn't even get any monster boxes because you had multimillionaires out there buying up millions of dollars worth of silver and gold. And it was like, wow, couldn't even get it there for a while. We seem to always be able to get it because we're more on the wholesale side than the retail. And that's another thing I want to talk to y'all about. There's a lot of bad actors out there.
Plenty.
And a lot of them will try to convince you to buy, say, an ounce and a quarter of silver. And that ounce and a quarter of silver, that same ounce and a quarter of silver that they're selling for, say, 58 to 60 bucks can actually be bought for, say, around 39 to 40 bucks. So they're really just gouging you because they figure that you don't know anything about gold and silver. You just want to hurry up and protect yourself. Well, be careful of those people because they are bad actors and they are raising the prices on these metals. I know, I've seen it, and they just gouge you. And before you know it, like a lot of these folks that have these IRA accounts, holy moly, people, you'll have $100,000 in the beginning, and then after that company gets done with you, selling you the metals and getting everything processed for you, you'll end up with about 45 to 50,000. You lose half of it right there.
You know what I saw the other day, which I was like flabbergasted. I was like, buddy, I'm over here looking at reading material, right? And I see an ad pop up, you know, open up a gold IRA, receive $10,000.
Impossible. Impossible.
Like, where is, you know...
That stuff pisses me off because what those people are doing is they're enticing you. First of all, you know this, I know this. Nothing is free.
How do they stay in business?
Right? Nothing's free. They can't. I've seen up to $25,000, right? Well, here's the thing. Believe me, you're paying for it. We don't give anything free. Well, we've given like $50 and just to attend the seminar because to us, 50 cents to have somebody to come in and learn is worth it. So, you know, to get you to come in and learn. And then we'll give you like a silver coin as well. We also do that, you know, for certain occasions. But as far as like giving thousands of dollars away in free metals, it's absurd. So don't believe them because you're actually paying for it. And they're just smiling as they take your money. And they're driving around in their Ferraris and all that. There's companies out there that are just like, you know, it's like unbelievable. Unbelievable. We do everything right here. We have a buyback guarantee where the metals, when the person purchases them, we purchase them right back from them, buyback guarantee. And we buy them back at what they call market value. You got something you want to say or do?
Yeah, absolutely. In a nutshell, right? You pick up the phone, you give us a call.
Yeah, 800-753-8534 or 323-380-5485.
You get on the line with either Alan or Robert, either one of us, and we have equipped and competent brokers on the trading floor.
Sure do.
Who are able to go ahead and answer your questions for you. But in a nutshell, in 3 steps, you pick up the phone, you give us a call. We provide you some of the options that you have unless you're aware of what you already want to purchase. Then lastly, you have to fund the account. You either can send us a bank wire, which we provide you the funding instructions, or we'll send you a return envelope if you want to write
do a paper check. Yeah, we'll even take paper checks.
Simple. Just get your house in order. Get your hands on something real.
Hey, Robert, I just want to say one thing.
Sure.
And you know, what people don't realize is that what you're actually doing is you're exchanging paper debt, or just a piece of paper. You can show them that. You're exchanging just green, dirty fiat currency for something that is real and physical, right? Because once that green fiat currency is disposed of, because remember, if you put a pile of cash into a fire, it'd be gone. That cash is gone, right? If it burns up in a fire, it's gone. But if I take gold or silver and I put that in fire, what's it going to do? It's going to melt. It's still going to be gold and silver. It may not be as pretty or fancy, but it's still gold and silver. I didn't lose anything.
That's right.
So all that is just rubbish, that paper. So what you're doing is you're exchanging debt for something that's real, right? And that's what we do. We actually take that paper that you exchange to us, and then what we do is we turn that into real gold and silver as well. So you got something you want to show them?
Yeah,
you had a coin there.
I just wanted to show them this silver round, .999.
I know you're in black and white. And you know, I tell you something. I went to a convention this weekend. Sure enough, I just, you know, everybody just, I'm just looking for the right person to come in here and show us this stuff, right? But I am going to get somebody in here that's going to make Robert, because Robert is not in black and white.
It may appear that way.
It may appear that way, but he should be in color like me. But anyway, we've got somebody that's going to be coming in here shortly, and we'll get this all straightened out. And I tell you, once we get it straightened out, we're going to be doing a lot of offers. We'll do like a call in. We gave one person in a webinar, we gave away a gold bar, and we didn't ask anything back from them at all. In fact, you know, we're going to do a lot of things like that. We'll do, you know, different things that we can do just to grab your attention so that you can understand and listen to what it is that we have to say, because what we're really offering you is a way out. And it's very important that you put your listening ears on and listen to what we're saying, because I'm telling you, it's coming fast. I don't want to be a conspiracy theorist. I'm not like that. I'm just telling you facts. And every time I get on a radio show, like, by the way, I'm on Clyde Lewis coming up on Ground Zero. If you haven't listened to Clyde Lewis, please go to groundzero.org. You will love this guy. He's amazing. He does not have a million advertisers. He's not about the money. He's about getting the word out. And so Clyde and I will be discussing central bank digital currency. We'll be discussing a lot of things that we discuss on here. In fact, some other little goodies we'll be talking about.
What day is that?
It's going to be on the 11th of October.
What time?
And it runs at 9 o'clock. Is it 9 o'clock?
Pacific Standard Time.
Yeah,
right?
Pacific Standard Time, and then midnight with him. But then there's also recordings. You can always go on to groundzero.org and find the recording. But it is live that night, and we get a lot of people. I mean, there's thousands of people that are listening to the radio station, not only here in the U.S., but over in Israel, all kind of places. In fact, they contacted me, and they're like, well, how can we get, you know, metals over here? And I'm thinking, well, I wish it could, but it can't. You can't get it over there. But anyway, if you have any questions, you can give Rob and I a call.
Remember, a peace of mind.
Yeah, write this down. 800-753-8534. Again, it's 800-753-8534. When you call them, you're going to get our call center, because, again, our phones are ringing here all the time. We have other ways that we get out to people as well, through Facebook and other channels that we get out there as well, other platforms that we get out there. So our phones are ringing. So the answering service, you don't have to give them a lot of information. Just give them your name and number, and then we'll call you right back. It's just an answering service. That's all they are. They're not going to answer any questions. They don't know any questions. And then you can also call the trade line direct if it isn't busy. You can call 323-380-5485. I'll give you that again, 323-380-5485. Listen, we've enjoyed talking to you again today. We look forward to talking to you again tomorrow. If you have any questions, just give us